Is this the start of a downtrend, or will Bitcoin retest the 25,000 range once more? Well, let's go ahead and jump into it. Okay, MegaWhale team, welcome back to the channel, guys. Thank you for tuning into the video today. I hope you're having a great day. Bitcoin has seen quite an aggressive crash over the last 24 hours. Now, this is not something unexpected. In fact, we were talking about this in yesterday's video. We even predicted that we were going to see an aggressive liquidation wick above that 25,000 range, followed by quote unquote a nuke, and we generally saw that happen. We saw Bitcoin crash around 4 to 5% as soon as we wicked up above that range, and we crashed all the way down, guys, to that next support sitting around 23,800, that first downward target. Currently, Bitcoin is sitting underneath the current uptrending support line of this, what you would call a rising triangle pattern. This pattern here is some sort of a bullish pattern. Of course, it does generally break towards the upside, and therefore we do have to talk about the possibility of one more leg toward the upside before we see any sort of correction on the larger time frame. But we'll discuss all of that today, guys. Before we get into it, smash the like button, hit the comment button, subscribe to the channel today. We do daily videos on Bitcoin, focusing on the price action. We focus on the technicals and the data. We also talk about economic data and the broader markets in our videos as well. So if you're interested in all that, you know what to do, hit that button. You can also find us on Telegram, guys. Second link down below. Access to all of our charts, updates, analysis, videos, information, and so much more. If you're interested in joining our VIP channel, where we have daily trading signals of entries, targets, stop losses, we do short, we do longs, and we also do spot trades in there. You can find all the information over here in our membership details and our trading track record. You'll also get access to our VIP group chat, where we do a bunch of different trades and scalps in there as well. Let's get into it, starting off with the market data. Currently for Feb, let's take a look how we're looking. So Feb, we'll go the monthly chart. We can see 4.52%. Yesterday we were around 7%, so we have come down around 5% over the last 24 hours. Again, quite an aggressive crash for Bitcoin. We can see liquidations are up 116%, and we can see volume is over 100 billion, up to 27% in the positive. Now, this was expected. Like we said, we saw shorts were stacking ever since we saw that bounce down towards 23,800 over here. We noticed shorts were stacking, meaning the short to long ratio was heavily moving in the favor of shorts, yet there were very little liquidations when it comes to overall short liquidations in this entire move toward the upside, meaning a lot of people had their stop losses placed above 25,000, 25,200, and we noticed on the order books there was quite a large gap in this range above 25,200, indicating a liquidation was likely, which is exactly what we saw. That explains the increase in liquidations. Obviously 117% increase in 24 hours is quite large. Volatility has moved back up to 2.64%. Again, when we see a lot of price action, generally volatility moves, and as you can see in liquidations, guys, both longs and shorts would have been liquidated quite aggressively in these moves, particularly these longs here, as we were buying these breakouts, buying that liquidity above 25,200 or above 25,000, only to get dropped back down on after the shorts got liquidated. So quite an intense day for Bitcoin, quite intense price action. DXY is still finding support above. We haven't closed above this local high over here. Closing above our local high at 104.2 will resume that trend. This upward continuation will resume. So we are looking for a close above here with a target of 105 if that occurs. Moving on to the Dow Jones, we can see the Dow Jones has actually closed, guys, that daily candle below the symmetrical triangle pattern. This, of course, is a confirmed break towards the downside, and of course is a bearish, very bearish break. Very important we keep an eye on this. Again, if we do find our next daily candle closes below here, we're most likely going to see that continuation down 33,000, potentially even 32,000. Definitely keep an eye on that, but we have officially broken toward the downside. The S&P 500 has also broken towards the downside. In fact, reaching our first target, guys. Yesterday, this video, we're up around here. We said our first target was 4,000. We came down, we touched 4,000 perfectly. This is going to be a bouncing point for the S&P 500, a first potential support. We can draw an uptrending support line right over here. We can see we're sitting right at support. for the S&P 500. So again, we have horizontal and now we have diagonal support at this level. So again, a potential bounce point, the S&P 500 bounces, we could see a DXY pullback, we could also see Bitcoin rally a little bit too. So we are keeping our eyes on that. Of course, if we do fail to bounce here and we continue toward the downside, we are going to be looking at this downward trending resistance over here and now support as our next target. It's anywhere between about 39.27 to 39.00. Moving on, we can see bond yields have continued its climb upwards, currently at a double top formation, 4.684, currently acting as resistance. Again, we cannot expect the DXY to rally any further until these bond yields start to push upwards. Let's get into Bitcoin, guys. I think that is going to be enough for the market. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So I hope that gave you a little update. Let's discuss Bitcoin. Let's talk about what we saw. Let's talk about the price action, the short term, and direction. We'll also talk about the technicals on the larger scale and the technicals on the macro. Let's go ahead and start off with a little update on what we have seen. So currently, guys, as you would know, Bitcoin has been in quite a long reversal structure, right? We had our falling wedge pattern, which you can see on the left over here. This, of course, is a pattern where we have 2 descending trend lines, okay, which are converging as time passes, indicating compression, decreasing volatility, and obviously decreasing velocity. This generally ends with a reversal, a strong reversal in that regard, because this is quite a large structure. Generally, larger structures equal larger moves. In this instance, this is a bullish consolidation as we developed a falling wedge out of a descending channel, which was our bear market, right? Our bear market was this descending trend line over here. We broke out the descending trend line, we developed a falling wedge throughout it, we broke out the falling wedge, and now currently we saw a break out of that falling wedge right up to the first initial high of that falling wedge, which we'll show you in just 1 second, which is going to be this point right over here, directly correlates to this point here, indicating our reversal out of this structure has been complete. Okay, the reversal is complete and we are now testing major resistance. So currently Bitcoin is still underneath the 25,000 to 25,200 major horizontal resistance. We can see 4 daily wicks, even 5 daily wicks, sorry, at or above or within that resistance range, all seeing rejections. Now, we've been talking over the last couple of days about how short-term momentum has been falling, and short-term momentum falling is an indication that we could see a reversal on the larger scale. We'll discuss that in today's video more. But do note, guys, before we see any sort of continuation upwards, we do need to close a weekly candle above this resistance zone. As you can see in the chart over here, a significant drop-off in the VRPV occurs above 25,200, indicating if we are able to push through this range with some nice momentum and velocity, we will continue quite aggressively into the $28,000 to $30,000 range. Until then, guys, we are at risk of a rejection, which we've been discussing in depth for the last couple of weeks. Now, a new low on the Bitcoin chart will not occur very easily, guys. We'll discuss that today as well. But for the reversal, the uptrend is still very much in play. If we do want to see a reversal create a new downtrend, we are going to have to lose the local low sitting around 21,500 for Bitcoin. So any rejection from this point should be considered a healthy pullback unless the 21,500 is lost. If we lose 21,500, we are likely to continue to our weekly POC, this red line over here, the weekly POC sitting at 19,200. If we do not bounce at 19,200, we definitely run the risk of creating or retesting these lows around 16 to 17,000. Very, very important stuff, guys. Keep your eyes on that over the next coming weeks and obviously the next coming months. Let's discuss the technicals on the larger time frame, then get into the small time frame. So starting off with our momentum indicators and moving averages, we can see currently the trend is still upwards, right? We are above our short time moving averages. We're above our 50 EMA, which is our larger time frame moving average here, represented by a red line, indicating the trend is very much still upwards. What we can see, again, we can see consolidation and the price is starting to push into the smaller time frame moving averages. This signals a decrease in momentum and a weakening in the current trend. This is something to be concerned of. Moving down, we can see the MACD is starting to lose positive momentum. We not only are starting to lose positive momentum, but we're seeing glimmers of negative momentum within this uptrending structure. We have overall decreasing positive momentum when the price is rising. This is of course a bearish divergence. On the smaller time frame, guys, we're going to talk about that a lot more, but looking at the chart here, just at a more recent price action, we can see in the last couple of days, we're starting to see weakening positive momentum again, and that could potentially cross over and again exacerbate the fact that we are going to be attacking resistance here, and we could potentially get rejected. Moving on to the market, the MACD, we'll go to the RSI next, and the market cipher B. RSI and market cipher B showing us similar things in terms of momentum. We have overall decreasing momentum at resistance, again bearish divergences signaling a potential rejection, and we can see the market cipher B is showing us a very similar thing to the MACD. Again, we had this area of no negative momentum, but overall we've had decreasing positive or weakening positive momentum as the trend is rising. This again is indicating a potential rejection incoming. Definitely keep your eyes on that. Looking at the Gaussian channel on the daily, guys, we're still very much above the Gaussian channel, so the larger time frame trend is still very much upwards, right? We're still in an upward trend, but these little indicators of momentum and moving averages are starting to suggest that this uptrend is weakening again, and it is at risk of coming toward the downside. Again, technicals don't predict the future, they only tell you what's happening on the charts. You have to look at those indicators and then infer what could occur. Okay, let's go to a smaller time frame and discuss what is happening for Bitcoin. So, a few things to note, guys. Liquidation week occurred above 25,200. We saw that, we got heavily rejected, again the price nuked. Currently, we are testing our uptrending support line, which is this black line over here. This uptrending support line is quite a significant level on the chart because losing this level would invalidate the current structure we have developed, which is a rising triangle, right? A rising triangle is a bullish pattern. It most of the time breaks towards the upside. It is slightly more bullish than bearish, but again, just because we're in a bullish pattern, it doesn't mean we're going to break up, particularly because this bullish pattern is sitting right at a macro resistance where we've had decreasing momentum, velocity, and of course volume again. So make sure you apply everything to your analysis, not just a smaller time frame. So very important, losing this level here will send us back down. Where are we going if we go back down? We're looking at that same level, guys. We're looking at 23,800 to 23,600. This is a major support. If we do lose a 23,800 to 23,600 level, we are going to be heading back down, and we could be heading back down quite aggressively to retest some of the lows around 22,500. Okay, and if we're losing that level, we could even come back down to retest around 21,500. So we do have quite a fair amount of support below us, but again, the trend is definitely starting to weaken at this resistance. We can see that in our momentum. Even on the 4 hour, 5 hour, 6 hour, moving up to the 1 day, we can start to see it moving down and down. We're getting red dot prints, we're getting MACD crossovers, we're seeing momentum fall even more. Again, this is exacerbating from the fact that a smaller time frame has been showing weakness now for the last couple of weeks. I've been talking about this for a very long time now, guys. We've been saying there's weakness in this range. It's very unlikely we're going to see a very easy break above 25k, particularly because 25k is not only such a strong resistance on the standard price action chart, but on the macro chart, on the log scale, we can see 25k is the 200 moving average resistance, the Gaussian channel resistance, and the 50 EMA resistance, which again adds to the fact that this range, this testing, this 25k is such an important level to break over, but again, such a difficult level to break over as that matter of fact. So on the smaller time frame, guys, we are seeing momentum fall. We can expect the price to come down more if we do not bounce at this smaller time frame uptrending support. And again, we do have some degree of support here. If we go over a very small time frame, go down to like a 15-minute chart, we can see we are developing some support, right? We have this downward trending resistance support line over here. This, of course, could act as a potential bouncing point for Bitcoin. We see a downward trending support over here. We're pushing back over that resistance range, indicating this move toward the downside out of this range could be a fake out, and we could see the price rally back up to 25k. That is a real possibility. Do not wipe that possibility off. The best way to look at the price action right now is a consolidation between two major zones. We're looking at the 25k to 25k 200, and we're looking at the 23,000 to 23,600. We're looking at ping-ponging between these levels. We should assume bounces are going to occur here and rejections are going to occur here until we get that directional break. If we do lose this level, I do believe we will lose it on the first attempt, meaning we're not going to get a fake out down. We will continue down to those next supports, looking at 22,500. If we do break above 22,500 again, or 25,200 again, sorry, there is a strong diagonal resistance sitting at that level. I'm going to go ahead and draw it in. We can see this is our diagonal resistance. This is quite a strong diagonal resistance. Again, our divergences are showing up on this resistance on the higher time frame, moving to something like a 12-hour chart. We can see those divergences are in fact showing up here on that 12-hour chart. Again, our local highs are printing, our local lows are printing on the RSI, indicating divergence. So there is a possibility that we'll still rally up and retest this rejection zone once more before we come back down. One major final liquidity grab over 25,200 could still occur. Now, if that doesn't occur, like I said, we are looking for a rejection and breakdown of 23,800 to 23,600 for that continuation toward the downside, guys. So keep that in mind. I'm going to go ahead and end the video there. Look for longs on the short term right now. We have crashed a significant amount. Look for longs on the short term right now. Longs are more favorable right now until this support range has been lost. Okay, potential for a bounce back upwards here to 25k is very likely. It is possible. Do not fall to the trap of getting in late shorts or late longs after the prices move significantly. When you're still in ranges, you do not want to be jumping on the wrong side of the coin, because it can get you liquidated quite easily. You look at these aggressive moves towards the downside, these aggressive moves towards the upside. These are all fueled by liquidations, guys. They're all fueled by liquidations. People are jumping on the wrong side. They have their stop losses above certain points. They get liquidated. The market gets a whole burst of liquidity. Those orders get filled and the price shoots in the opposite direction. That is exactly what we saw here happen. It's exactly what we saw here happen. It's exactly what we saw here happen. It is a massive chop zone for retail investors. Be very careful when you're trading this, and of course, use proper risk management. Before we get into in the video, go ahead and sign up to Crypto Academy. Contact us over here. This is a 10-unit course. We teach you guys how to trade. We teach you everything from the fundamental concepts. We taught you about structures, patterns, candlesticks, technical indicators. We teach you how to use them and apply them to your own trading. We teach you risk management and market psychology as well. So go ahead and contact us, and we'll see you guys tomorrow. Cheers.